Hello, world. Welcome, I am your host Mr. Stag. Today we will be taking a deep dive into the history of Cargill, Inc. Before we get into the video, do not forget to like, share, and subscribe. Cargill is the largest private company in the United States based in Minnetonka, Minnesota. Since its founding in 1865 by William W. Cargill, the company has maintained its status as a private company mainly owned by family heirs. Cargill is one of the largest players in the agricultural, livestock, and processed foods markets. Employing over 166,000 employees in 66 countries, it is responsible for 25% of all United States grain exports. The company also supplies about 22% of the U.S. domestic meat market, importing more product from Argentina than any other company, and is the largest poultry producer in Thailand. All the eggs used in U.S. McDonald's restaurants pass through Cargill's plants. It is the only U.S. producer of Alberga processed salt, which is used in the fast food and prepared food industries. Some of Cargill's major businesses are trading, purchasing and distributing grain and other agricultural commodities, such as palm oil, trading in energy, steel and transport, raising of livestock and production of feed, and producing food ingredients such as starch and glucose syrup, vegetable oils and fats for application in processed foods and industrial use. Cargill also has a large financial services arm, which manages financial risks in the commodity markets for the company. In 1865, William Wallace Cargill leaves the family home in Janesville, Wisconsin, and he becomes the proprietor of a grain flat house in Conover, Iowa. In 1867, W. Cargill is joined by two of his younger brothers, Sam and Sylvester, in Lime Springs, Iowa, where the business constructs a grain flat house and opens a lumberyard. W. acquires storehouses to take advantage of the great post-war agricultural and railroad expansion throughout the plains. James F., one of W. Cargill's younger brothers, joins the family business. Cargill follows this growth, and experiments with vertical integration by establishing a 5,760-acre farm near Sherburne, Minnesota. Known as the Mule Farm, but it loses money. In 1885, the three Cargill brothers own or control 102 structures in Minnesota, the Dakotas, Iowa and Wisconsin, with a total grain capacity of over 1.6 million bushels. By this time, Minneapolis and Duluth are identified as prominent grain centers. In 1890, the Minneapolis operation, under the direction of Sam Cargill, drops the Cargill Bros. name and incorporates under Cargill Elevator Company. In 1903, Sam D. Cargill dies, creating a void in leadership. John H. McMillan Sr. moves to Minneapolis from Arkansas to become general manager. In 1909, W. Cargill dies at age 64, precipitating a fiscal crisis for the company. John H. McMillan Sr., now president of the Cargill Elevator Company, works to reassure creditors. In 1912, Cargill Securities Company is established to take over the indebtedness of the Cargill estate. To pay off creditors, $2.55 million in gold notes is issued, due in 1917, backed by Cargill Elevator stock. Austin Cargill, W.W.'s youngest son, joins the company. In 1915, with war in Europe, grain prices fluctuate wildly, and Cargill Elevator posts a good year. This considerably aids the company's goal to repay its debt. Cargill posts record profits, and grain exchanges are criticized for the high price of wheat arising from wartime demand. In 1918, the number of Cargill country elevators drops to 140 compared to 189 it had a decade ago. The financial crash in late 1920 results in Cargill Elevator's first annual loss in its history. In 1928, Cargill Grain Company Limited is organized in Canada with an office in Montreal. It is the company's first office location outside of the United States. In 1935, Cargill becomes a member of the Chicago Board of Trade. Cargo Carriers, formed in 1930, purchases its first ships, the 248-foot Mayan and the tugboat Protector. In 1936, various Cargill businesses emerged to become Cargill, Incorporated. John McMillan Sr., while retaining his status as chairman of the board, steps down from presidency, which is assumed by John McMillan Jr. Cargill begins work on the ocean-going Carlantic to take advantage of wartime shipping needs. In 1942, Cargill contracts with the U.S. Navy to build 6 ocean-going tankers and establishes Port Cargill on the Minnesota River as the construction site. In 1943, Cargill enters the soybean processing business with the acquisition of plants at Cedar Rapids and Fort Dodge, Iowa, and Springfield, Illinois. In 1944, John McMillan Sr. dies at age 75. In 1947, Cargill's offices in Argentina and Brazil are reopened after World War II, and Cargill begins its hybrid seed business in Argentina. In 1954, Cargill enters the salt business by barging Louisiana rock salt up the Mississippi River for sale in the upper Midwest. In 1957, John H. McMillan Jr. becomes chairman of the board and Cargill McMillan, president. Cargill installs its first electronic computer to formulate feed and pricing, an IBM 6560, in the Minneapolis office. In 1960, John McMillan Jr. dies suddenly. Irwin Kelm becomes the first Cargill president who is not part of the Cargill or McMillan families. Terry Morrison is named chairman until the following year, when Kelm is elected to the post. In 1961, Cargill purchases the Belle Isle mine to supply its own source of salt. In 1965, Cargill celebrates its 100th anniversary. From 1960 to 1977, Cargill entered many new businesses including corn wet milling, frozen orange juice, evaporated salt business, beef processing, livestock, egg, poultry, and steel production. In 1980, Cargill enters the coffee trading business by acquiring Schultz & Company, New York. In 1981, the acquisition of Raleigh Bros & Coney and associated trading companies from Bowater Corp., London, makes Cargill a leading international cotton, rubber, wool and fiber trader. Company fiber trading and processing locations now include Kenya, Pakistan, Nigeria, Tanzania, Singapore, Malaysia, Hong Kong, Peru, France and West Germany. In 1987, General Cocoa Company Holland B.V. and Gherkins Cocoa Products, Inc. join Cargill, making it a leading international cocoa processor and supplier. Cargill sells its U.S. broiler operations to Tyson Foods and acquires Tyson's pork-producing facility in Marshall, Missouri. Whitney McMillan retires after more than 44 years of service at Cargill, including 18 years as chairman and chief executive officer. The board of directors elects Ernest S. Machek as chief executive officer. In 1997, Cargill acquires the North American salt production, processing and marketing assets of Axo Salt, Inc., making Cargill one of the largest salt production and marketing companies in the world. Cargill and Continental Grain Company announce Cargill will acquire Continental's worldwide commodity marketing business. The transaction includes Continental's grain storage, transportation, export and trading operations in North America, Europe, Latin America and Asia. Cargill launches Strategic Intent, which involves positioning the company so that by the year 2010, Cargill will be the recognized global leader in providing agri-food chain customers with solutions that enable them to succeed in their businesses. In 2001, Cargill acquires the Turkey business of Rocco Enterprises. In 2003, Cargill's earnings passes $1 billion for the first time in its history. In 2003, it split off a portion of its financial operations into Black River Asset Management, a hedge fund with about $10 billion of assets and liabilities. In 2004, Cargill Fertilizer and IMC Global combined to form a publicly traded firm, the Mosaic Company, one of the world's leading producers and marketers of concentrated phosphate and potash crop nutrients. In 2006, Cargill is the first U.S. exporter to deliver beef to Japan after Japan lifts its ban on U.S. beef. Cargill revises its strategic intent so that by 2015, Cargill will be the partner of choice, recognized as having great people with imagination committed to delivering the best ideas to the worlds we serve, ag, food and risk management. Cargill stockholders have pushed for an initial public offering (IPO) several times. But because of its massive size and huge assets, Cargill was able to avert the pressure to go public. In 1993, it started an employee stock plan that allowed owners of stock to cash in on parts of their shares. This kept the pressure of an IPO at bay, with nearly 90% of the company remaining in the hands of the many family shareholders. Another cry for an IPO came in the late 2000s. Cargill faced pressure from the shareholders and charitable trusts that owned stock in the company. On paper, they were worth a lot, but the company was illiquid. In 2011, the Mosaic Company and Cargill agree to split off, and Cargill distributes its 64% stake, or 286 million share position, in Mosaic to shareholders and debt holders. This move allowed shareholders to trade Cargill stock for Mosaic shares. This spin-off also afforded Cargill a chance to pay down more debt. Cargill has donated more than 10,000 metric tons (22 million pounds) of rice to the World Food Programme USA, specifically to assist those afflicted by the worst drought in 60 years in the Horn of Africa. Cargill's donations have fed nearly 1 million people a month. The price of doing great comes at a cost. Cargill has frequently been the subject of criticism related to the environment, human rights, finance, and other ethical considerations. In 2015, Cargill celebrates 150 years of helping the world thrive. Cargill sells its US-based pork business to JBS USA Pork. Cargill acquires ADM's global chocolate business. Cargill acquires EWOS, a global leader of salmon nutrition. Metal One Corporation acquires Cargill's U.S. metals business. Macquarie Group acquires Cargill's petroleum business. Today more than 100 family members own about 90% of Cargill shares. Over time, they have diversified away from family management. The 17-member board of directors only has 6 family members, with the rest coming from other company directors and outside personnel. The Cargill family has a combined net worth of $47 billion. Forbes magazine has published an annual list of the largest private companies in America for 35 years, with Cargill claiming the top spot in all but 2 of those years. This total puts Cargill in the top 15 on the Fortune 500 list of highest revenue-producing companies. The massive size of the company and its continued focus on paying down debt has helped it maintain a good debt rating. Cargill has an A rating with both Standard & Poor's, S&P, and Fitch, and an A2 rating from Moody's. With these good ratings, it can continue to raise money at low interest rates without needing to seek capital through an equity offering. The company's debt has shrunk from $12.3 billion in 2015 to $9.6 billion in 2019. While you can't invest in Cargill, you can invest in 2 of the company's largest rivals. Bunge Limited and the Archer Daniels Midland Company are publicly traded companies in the food processing and agricultural industries. Through a series of acquisitions, Cargill grew from a single grain mill into a company generating more than $130 billion in annual revenue today. Tell us what you think about Cargill in the comment section below. Mr. Stag logging off.